Welcome to today's episode of the Michael Yardney podcast, where Dr. Andrew Wilson and I are going to chat about Australia's rental crisis. We're going to talk a bit about what's caused it, how long it's going to last. You'll hear the latest rental data and vacancy rate figures from around Australia. But we're also going to have a look at, Andrew Wilson's got a great solution. I wonder whether you think it's the right solution as well. But we're going to look at other ideas as well, such as build to rent, and a bit of background about how we got here and what it means to you as a property investor. So whether you're just starting your journey and wondering what's going to happen to the rental markets, which are obviously going to bring your income in, or if you're already an experienced investor and being annoyed and frustrated by some of the regulations and the government interference, I hope you're going to get some benefit from our chat. So let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Australia's rental market is in crisis. Vacancy rates are at virtually all-time lows, rental stock remains very, very slim, and rents are skyrocketing. So how did we get into this rental crisis? How long is it going to last, and what does it mean for property investors? Now, that's what I recently discussed with Dr. Andrew Wilson, Chief Economist of My Housing Market, in one of our weekly Property Insider videos. In a moment, I'm going to share that audio of the YouTube video, and you're going to hear Dr. Andrew Wilson explain, he's actually going to give an interesting solution to the housing crisis. But before I share that recording, let's put some context to the situation. Now, you're going to hear Andrew Wilson explain how rents have shot up again over the last month, and we're now in the longest stretch of continual rental price growth on record. This has, of course, caused the media to blame ugly, greedy landlords for taking advantage of tenants. However, the media didn't thank landlords when they dropped the rents over COVID, and in general, rents haven't kept up with inflation for over a decade, so they're really only playing catch-up for long-term investors. But now there's growing concern that the supply of rental homes could get even worse as higher mortgage costs hit landlords, as government interference makes property investment less attractive, in fact, in some cases, even economically unviable. And that means more landlords are selling up and fewer new investors are entering our housing markets. Of course, the reason we're in the rental crisis at the moment is because our markets are undersupplied. A balanced rental market is one where the vacancy rate's around 2%, and anything below 2% is where the demand from tenants exceeds supply. And currently the vacancy rates in many locations around Australia are below 1%. Okay, how do they get so low? Well, put simply, there's fewer rental properties today because there are fewer investors buying properties. Owner-occupiers have dominated the market, and the number of investors selling up has trended upwards. We've discussed on this podcast before how, at the moment, about a third of properties being listed on the market are investors selling up, and that's much more than the long-term averages. Now, again, I just wanted to put some context to this before you hear my chat with Andrew, and there are 11 million dwellings in Australia, but there's about 10 million households in Australia. You know, there's lots of vacant dwellings, second homes, holiday homes, 10 million households, and the majority are owner-occupier. In fact, 67% of households are homeowners, and 31%, which equates to about 7 million people, are renters. The problem is there just isn't enough rental stock for those 31% of our population. Why? Well, there are several reasons why there just isn't enough stock. I mean, first of all, supply is low. I've already said that. And over the last little while, as we've already mentioned, a lot of investors are selling up. It even started during the property boom of 2021, where a lot of people sold up because the property market turned. And currently, higher borrowing costs mean there are fewer new investors entering the market. So not only have the number of properties on the market for rental decreased, but a lot of those that were previously on the market for everyday rental have gone to Airbnb as well. So again, the rental stock is decreased. At the same time, government intervention has annoyed, dissuaded investors. Remember, there wasn't that long ago that there was talk about rental caps and rental freezes. Well, that's gone by the wayside now. But tighter rental laws certainly did dissuade some property investors, and many of our state governments are changing tenancy regulations in favour of the tenants. Now, one of the most attractive advantages of being a property investor is being in control. You want to have full control of how you use, how you improve your asset. And some of these new tighter rental laws that favour tenants reduce the amount of control investors feel like they've got. Now, I know there were something like 83 changes to the rental regulations in Victoria in 2021, and Metropole Property Management had, we got through them all. We helped all our landlords with it, but it took a lot of time and effort to understand them and to protect our landlords. So, unfortunately, tighter rental laws and all the other challenges are dissuading investors. And there's a really short supply of new dwellings in the market. I mean, during the pandemic, the soaring cost of materials and construction costs created an increase in the cost of new developments. Now, during the pandemic, though, the government supported the construction industry. There was home builder and other incentives, but they're all gone now. And we know that a lot of builders have gone broke. So while building approvals have decreased considerably, even a lot of the dwellings that have got building approvals, especially the apartment towers, they're just not financially viable to build at the moment. So there's fewer new properties in the pipeline. Now, when I have a chat with Andrew Wilson, we're going to talk about the build to rent situation, which will bring a small number of new dwellings onto the market, but not enough to make a big difference. But the other big change is migration levels are high. And you'll hear in my discussion with Andrew how the huge number of temporary visa holders has soaked up a lot of our rental accommodation. The population has grown much stronger than anyone anticipated. And at the same time, households have shrunk just a little bit. A seemingly tiny shift in the composition of households has interestingly added to the housing crunch. Look, over the decades, the number of single-people households, single-parent households has increased, and as a result, the average household size has decreased. In other words, you need more accommodation for the same number of people. And over COVID, we also separated a little bit. We moved to the point where we didn't want to share as much with other people. But apparently over the last couple of years, according to the census, the average household size fell from 2.59 people per household to 2.55 people per household. Now, that doesn't sound like a lot, does it? But interestingly, it translated to the need for 160,000 additional dwellings just to house the same number of people. And the sort of dwellings we wanted have changed. Some of us want more home office space, others wanted larger dwelling, more outdoor space. So all this has led to a crisis, more people wanting accommodation, less accommodation available. There's a bottleneck of difficulty getting new accommodation out of the ground, and nothing's going to change. Now, some people are going to want to, get out of the rental market and buy their homes instead. Of course, that's challenging at the moment also, isn't it, with difficulty with serviceability. So there's no end in sight to Australia's rental crisis. It's bad news for tenants, and I believe it's just going to underpin the benefit of those who stay in the property market, landlords who stay in, because there's a perfect storm of ultra-low vacancy rates, rising rents, low supply, and this imbalance of supply and demand it's not going to give relief for renters. And I'm not saying take advantage of people, but property investors are taking advantage of the situation and increasing their income, but they have to, because mortgage costs have gone up, insurance costs have gone up, land tax has gone up. But if you look forward, net immigration isn't going to decrease. The government is not going to stop the immigrants coming in. A lot of them, as you'll hear in my chat with Andrew in a moment, are temporary visa holders and students, and we need those, especially the students, to help boost our education system, which is a huge income earner, a great export industry for Australia. So don't get disheartened by the government's annoying intervention. They keep doing things like this. Way back in 2014, APRA's macroprudential controls throttled the banks and made it hard for them to lend. You may remember there was an increased cost for interest-only lending. The various governments, particularly the Labor Party, threatened to remove negative gearing. APRA changed the buffers over time. The Reserve Bank raised interest rates. There's always going to be challenges in the property market. But I first started investing over 5 decades ago. The first property I bought cost me $18,000. Hey, by the way, I got $12 a week rent for it, and I was excited by that at the time. The same situation that is going to keep rents rising is also going to underpin the value of well-located residential real estate. So if you're a little bit confused about what to do at the moment, if you're not sure how this is going to affect you, should you buy, shouldn't you buy, should you buy a home before you buy an investment, don't try and do it on your own. Have a chat with my team at Metropole. We are much more than buyer's agents. We give holistic wealth advice and property advice. And sure, you can use our buyer's agency, but we have property management. We've got vendor advocacy. If you're planning to sell a home or an investment, we definitely help home buyers, wealth advisory, renovations, development, and even Mark Creedon's division of Metropole's Business Accelerator Mastermind to help business people. So my suggestion is, why not take advantage of this new stage of the property cycle and have a chat with my team at Metropole? I'll leave a link in the show notes, because I see this as a window of opportunity for investors with a long-term focus. And it's not because properties are cheap at the moment, because they've now almost got back to the point where they were before the slump. It's just that when you look back in 3 years' time, at the price you'd pay for something today, they're definitely going to look cheap, because in due course, interest rates are going to fall. We've probably hit the peak of interest rates. In due course, more and more people are going to realise inflation is going to is under control, and they're going to hop back into the market. When they do, FOMO will return, and the cycle will move on. So if you're wondering, what should you do? Don't try and work it out on your own. Have a chat with the team at Metropole. I look forward to being part of your ongoing wealth creation journey. And now let's have a chat with Dr. Andrew Wilson. And if you don't regularly subscribe to our Property Insider videos, go to YouTube, my YouTube channel, look for Michael Yardney on YouTube, and subscribe, where every week Andrew and I have a chat. It's well known that Australia is in the middle of a rental crisis, with not enough accommodation, historically low vacancy rates, and skyrocketing rents. The recently released national accounts showed that Australia's population has grown by around 620,000 people in the past financial year. That's the highest number on history, and interestingly, 100,000 more than what the May federal budget predicted. This record 2.8% expansion of the 15-plus age group of our population is placing a great strain on our rental markets. And the number of overseas students and also people on graduate visas in Australia has increased considerably, by actually over 300,000 in the last financial year. What this means, when you drill down into the figures, I was surprised to see that around 1 in 10 people in Australia currently are a temporary migrant, visa holders and student visas. Now, of course, this explosion of temporary visa holders was being led by international student numbers, and that's good for our education system, and one of our biggest exports is education, but it's placed a huge strain on our rental markets. So to give us an update on the latest My Housing Market Rental Report, I'm joined by their chief economist, Dr. Andrew Wilson, in our weekly Property Insider chat. Hi, Andrew.
Yeah, good day, Michael. And yeah, another month, another bad news story for tenants. I mean, we get a little tired, perhaps, of the consistency of the issues with our rental market. I mean, we've had some sort of good news on the policy front over the last month, but in terms of government's attitudes towards the rental crisis, but there's certainly no relief coming through in terms of what's actually happening in the rental market. I think it was very interesting what you said, Michael, about the student visas. Unprecedented numbers of student visas now, or temporary visas, which basically means student visas. And of course, that's going to put a lot of pressure on our rental markets. And maybe we saw the first sign of that with the August results, Michael. Not so much in rents, but in vacancy rates. We really saw a significant collapse in vacancy rates, which are already near record lows, and that had just shown some stabilising through June. But of course, the university semester starts in August, and a lot of internationals would have been focusing on getting into Australia for the beginning of that second semester, or the last semester, or whatever it is, the mid-year semester. And what we saw with, as you said, the latest report, August rent report from My Housing Market, was, as I said, a collapse in vacancy rates, where there's a real shortage now of houses and units for rent. And all capital cities recorded lower vacancy rates over August compared to July, with the exception of Darwin, which was flat. Vacancy rates low, increased demand, particularly from students. We're also continuing to see upward pressure on rents, no surprise. I think it's being restricted by financial constraints. People can't keep paying high levels of rent increases. It's dependent on their wage increases, of course, their capacity. We saw Sydney house rents just ease a little bit over the month, but still $750 a week. Sydney house rents are the highest in the country of all the capitals. All the other capitals, with the exception of Perth and Hobart, recorded increases in house rents over the month, and Melbourne up by 1.3%. The yearly results, the annual results, now have Melbourne up by 18.4%. Of course, Melbourne's rents are still the best part of $200 a week lower than Sydney's, but have still increased by 18.4%. I think there's plenty of upside for Melbourne house rents. And as I mentioned before, vacancy rates are at record low levels, basically reflecting a lack of property available for tenants or for new tenants. Similarly, with units, Michael, we saw vacancy rates collapse or fall in every capital city over August compared to July. Again, of course, we would suspect that most students would be looking at units rather than houses for their rental focus, but certainly vacancy rates down sharply in units over August compared to July. In terms of rents, we saw Melbourne unit rents just ease a little bit by 2.4% over the month. Sydney was flat, Hobart was flat, Perth up 1.9%, and Darwin, which of course is quite a volatile market, low observations, up by 7.8%. But the annual growth in unit rents is still quite spectacular, Michael. Sydney up by 30.9% for unit rents over the past year. Melbourne up 28.8%, just a tick under that 30% mark. And Brisbane unit rents, which eased just a little bit over the month, down by 0.8%, however, have still increased by 22.9% over the past year. Melbourne's vacancy rate still remains the highest of the major capitals there at 1.4%. So there's still offerings for units in Melbourne, but I would suspect that won't last for too long, particularly as momentum grows in student demand for apartments in Melbourne, of course, which has a very significant education sector and is certainly geared for international students. And I would suspect that we've got lots of upside, or plenty of upside, not just for house units in Melbourne, but also house rents in Melbourne, but also unit rents in Melbourne as well.
Now, the media makes a lot of fuss about these skyrocketing rents, but they didn't make a fuss when landlords had to reduce their rents over COVID, or if you look back over a decade and there were periods of years when rents were flat. So over a decade, rents are really just catching up with inflation. But the government's got a solution, Andrew. They said, we're going to encourage big businesses and superannuation funds to build large complexes and provide affordable accommodation in the areas where people want them, in long-term accommodation. And we're going to give these companies significant tax benefits, and that's what's called build to rent. But a recent report by Knight Frank showed that at the moment, there's only 8,350 build to rent properties under construction around Australia. A further 12,900 have been approved in the near term, but approved doesn't mean they're going to come out of the ground for some time yet. And they're suggesting that by 2030, there'll be 55,000 of these units constructed. If that even does eventuate, that's only going to make up 1.5% of Australia's total rental supply. In other words, it's not going to move the needle. And in my mind, Andrew, they're unlikely to offer what the government's looking for. I guess what we're all looking for, affordable accommodation.
Yes, Michael, or just accommodation, full stop. But look, my thoughts have always been, my view on build to rent's always been clear. It's obviously an opportunity for big business developers to get their hands to some degree on the public purse to be able to support their developments. Of course, these developments will only work with significant concessions from government. And the question is, well, maybe governments would be better off just biting the bullet and putting the resources directly to social housing and just leave it at that, rather than putting the money into the pockets of developers. It's not going to make any difference at all to the big picture in terms of rental accommodation. There's a lot of question marks over whether it will work in the first place, because whether people will be interested in securing these type of mixed developments, whether people will be interested in buying in an environment where it's a mix of rents and owner-occupiers. But regardless of the nature of the models, Michael, I think the big picture is that, having these dedicated rental developments, I'm not sure. I mean, a lot of it reflects what has been researched in terms of models in Europe, particularly, yes, and the US. Australia really doesn't have that sort of ethos in terms of its accommodation. But as you said, the real issue here is, Michael, firstly, it's not going to make any difference to our rental position. It's certainly going to be a profitable proposition for big business, for developers, and whether that money could be used in a more directed affordable accommodation directly from governments, I think, is the question here. It's obviously been spruiked by those that want to get involved with these government concessions to build their developments. You'd have to have it pretty tight in case what happens if these developments can't find tenants because the rents are too high. The whole point here is, regardless of anything, it's not going to impact the significant issues Australia has with its rental market now.
Look, I agree with you. Developers aren't going to go into it unless they get concessions, and in particular, they're asking for land tax and depreciation concessions. Of course, if the government gives concessions, they've got to get the money from somewhere. And some of the people like you and me, are going to be paying our taxes, and as property investors, the government's using us as an ATM to support other property investors. I'm not sure that's a level playing field. I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options? We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Now, these build-to-rent units are being built, in particular, Melbourne's the popular location, and Mirvac has just completed one, and apparently a really nice one across the road from Queen Victoria Market. And they're proudly saying that because it's such a good standard and because of the amenities in the building, they're able to achieve 20% higher rents than going rents in the area. So again, this isn't going to give affordable accommodation. Melbourne's got close to 5,000 built-to-rent units under construction and another 8,250 approved. Brisbane's got 1,750. Interestingly, Sydney haven't got as many in the pipeline at the moment. So it'll be interesting to see how it transpires. But having said that, neither of us can see it really making a difference to the rental shortage.
No, Michael, it's a proposition. It's a business proposition, and Mirvac and the other developers will make a profit out of it. That's what it's designed to do. They have to make a profit. That's their responsibility to their shareholders. The governments have to assist them in making that profit. Now, let's think a little outside the square since we're speaking about this. Why don't we give some incentives to small-scale investors, Michael?
Oh.
Hey, what about all that government largesse? Perhaps they're being wined and dined by the big end of town to get their build-to-rent propositions up and running. But why don't we start thinking about, hey, here's an idea. Let's incentivize small investors. Let's just reduce perhaps some of the imposts that we put on small investors to give them an incentive to get into the market. Now, we could be talking tens and tens of thousands of new small-scale investors that would be encouraged by positive tax position in terms of residential investors, but would ease, perhaps in a more substantive way, the issues that we have in our rental market. But of course, it's the small investor has been treated as some sort of a pariah over the journey by all our government agencies and bits and pieces, and they've been battered from pillar to post. Of course, we have the fleeing of a lot of small-scale residential investors to Airbnb, looking at short-term accommodation. I believe governments now are starting to think, well, maybe that's one way to get them back into the permanents, is to start making it tougher for Airbnb. But all these ridiculous policies that have been instituted, from higher taxes, higher levies,
higher interest rates.
Yeah, the credit squeeze, which was nonsense, was cheered on by the Reserve Bank. Geez, how many mistakes did that Reserve Bank make? APRA, and it's like, we've got to protect the banks from small investors. Well, hello, have a look at that rental market, which is now, it's got to be decades away from, under normal circumstances, having any semblance of balance because of all this, negative treatment of Australia's small investors. So why don't we just think a little bit more logically, and instead of a handful of developments being afforded the luxury of public money benefit, why don't we look at the small-scale investor and try to provide them with some more incentives? I'm sure there could be policies developed that would be a much more positive, or have a much more positive impact on our tragic rental market as it is at the moment.
And it would work much quicker, wouldn't it?
It would. Small private enterprise here, small-scale entrepreneurs, risk takers. It's what Australians do. It's what they've done. With 40% of our housing is private rental stock. What are governments all about? Where do these people come from?
At least they have now put rental freezes and rental caps off the books. They've actually clearly come out and said they're not going ahead with that. So that was at least a bit of good news for property owners, but also for tenants, because they would have had unintended consequences hurting tenants.
Yeah, I was almost surprised when they actually came out and said, no, rent freezes don't work, because I thought, we're going to see this. We're going to see governments jump on the rent freeze bandwagon, which has been a disaster in Scotland, where it was instituted last year. So they've got lessons they can learn from actual initiations of these policies. But yes, thank the Lord that they've finally said no rent freezes, which would have been just another reflection of the appalling policy making in terms of property that has characterised Australia over the last decade or so. But we need to move more proactively to encouraging small-scale investors to get back into the market, not encouraging the big end of town to be creating boutique developments which aren't going to really offer any solution to Australia's rental crisis.
And because none of this is on the horizon, as you said a second ago, there's no end in sight for our rental crisis. Thanks for giving us the latest update from My Housing Market.
Thanks, Michael.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to share with you the idea that everyone is born lucky, and that your very existence is all the proof you need. Now, this came from a blog recently written by my good friend Tom Corley, the co-author of our great international bestseller, Rich Habits, Poor Habits. In that blog, Tom Corley mentioned Dr. Ali Benazir, the author of The Tao of Dating, and he estimated that the odds of you existing are 1 in 4 quadrillion. He makes a very impressive analytical argument in arriving at that number in his piece, Are You a Miracle? It's a great piece, but to save you time, here's the short of it. Humans have been around for about 3 million years, or 150,000 generations. The odds of your ancestors surviving those 150,000 generations are staggering. The odds of your parents meeting, they're staggering. The odds of one of the unique sperm meeting one of the unique eggs is staggering. In short, you are a miracle just by virtue of being alive. You're an impossibility, yet you're here. Despite the fact that your existing defies impossibility, so many people live their lives drowning in impossibility. Rather than embracing the knowledge that your mere existence is proof that anything is possible, the average person sees impossibility everywhere. They view their lives through the lens of impossibility, allowing limiting, negative beliefs to anchor them to lives of mediocrity. What a shame. When you consider the near impossibility of you being alive, it leaves no doubt that everyone who's alive was born lucky. The very fact that you exist means you're lucky. It also means your very existence is a gift. You've been given a very rare opportunity to exist, which means you've been given the opportunity to make that life meaningful. You're clearly here on earth to do something with that gift that life gave you. Knowing you should not even be alive, that your existence defies the laws of probability, is all the evidence you need that anything's possible. You can realize those dreams. You can achieve those goals. You can become successful. You can become rich. The life of your dreams is not impossible. Why? Because your very existence means that you were born lucky. Be grateful for the opportunity life has given you. Stop thinking it's impossible and start thinking, I'm lucky to be alive, and therefore anything is possible. So my recommendation is go after your dreams. Pursue your goals. Never quit on them. You're here, and statistically you shouldn't be. That means all is possible because Lady Luck is on your side. Well, thanks for spending the last little while with me, and I hope you got some benefit from this show. If you did, and you know somebody else who'd also benefit, please tell them about the Michael Yardney podcast. There's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons down the bottom. Press it and share it, or just tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour, and you'll definitely be doing me a favour and helping me in my quest to make as many people as possible financially literate. Now, there's ways of catching up with me between these shows. Just look for Michael Yardney on social media, or why not join my private Facebook group? Go to Facebook and look for the Property Update Facebook group. And I have a way of saying thank you to you for subscribing to this podcast. Go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where you can get a bunch of ebooks and reports. My way of saying thank you. And when you've got time, why not listen to some of the old podcasts? There's individual lessons in each of those that I think would be helpful for you. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?